Good morning, everyone, and welcome to the morning homework session and pre-market analysis for Tuesday, January 14, 2014. For those that are visiting us, we are Quantum Leap. We are a self-organized learning environment. We've been around for about 4 years. We run a private Skype room. If you want to come and check it out, you can do that. Just send me a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. And I'll give you free access to the room for a bit, see if you like it. Of course, every morning we come together to do our homework and to prepare ourselves for our trading day. Before we get started, let's get the disclaimer out of the way. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves risk or loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than the initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades you see are for education purposes only. To please trade your own plan. Okay, mouthful. Okay, so just taking a look at the numbers again. We've got our year high at 42.50. I think the more important number is the 37.75. This was one of my main points yesterday. We ended up with a neutral extreme, and we went up and tested this number, and the sellers stepped in and held us below the year open. So we're still on a negative year and had a bit of a retracement. I think it was just over 1% we lost in the marketplace. But I mean, it doesn't invalidate the trend. It just, we had a bit of a retracement, a little bit bigger than we thought yesterday. But I think it's not the end of the world yet. Previous month open is 1806.25, so we are trading above December's open, and of course we have the all-time high up at 1846.50, which is still a target to the upside. Intraday numbers yesterday, we had that Globex open at 38.50, the high at 38.75. We came within 2 ticks of taking out the high or taking out the open. We missed it. We hit 38.25, and the RTH is our high. The seller stepped in and took us right through all the value area and out of balance and back down towards that 1809.50. We opened at 1833.50, open auction in range. We broke the IB to both sides, so we had a neutral extreme day. The reason why it's neutral and extreme is because we had a rotational day, where we went up, broke the IB high, then broke the IB low, but the sellers stayed in control and we closed near the lows of the day. Even though we had a bit of a retracement off that 950, we did close, quite a ways away from the IB low, which was at 1832.50. We closed at 1850. Initial balance high, 1838. We broke it. This was a classic IB one-tick reversal. It's just too bad. I missed it. I was looking to get short at 33, and I missed it, and I got caught trying to catch a falling knife all day yesterday. It was frustrating to me. But that's the problem. I hesitated with the entry. I was looking at the VIX, and went to go click it, went right by me, and I just wasn't going to chase it. And then after that, it was, what was it going to do? The only thing I could do was look for the retracement back to the mean. But the problem with neutral extremes is they start out looking like they're going to be rotational, and then they get into a trend, and those are tough days to trade. You notice that all our intraday numbers, 1230 number, RTH high, low, close, and VPOC were all to the low side. We stole the VPOC again near the close, brought it down from the upper distribution from the morning. It was up there all day until just going into the end of the day when we rotated back up towards that 15. We got the VPOC shift then. So we had a 28.75 range, one of the larger ranges that we've had in a while. So it was a pretty big day. Took out a whole bunch of value from the prior couple weeks of being up in this range. So 20-day ATRs expanded slightly, but nothing, nothing significant. 12.5 on the RTH, 14.3 on the full session, and 7 in the Globex. Value area was lower. Value area high 3250, value area low 950, and pretty large value area, and that's typical of a trend day or a neutral extreme day. And of course, we broke the IB to both sides, but the high side was broken on a make and break inside the initial pocket of the IB break, but it was only a one tick break and then the reversal. Nothing else jumps out. News today, we had core retail. Gave us a little bit of pop in the market, but not much. Got us back up above that CLVN at 18. The big one that I'm going to be watching, and I know it's not red, but with all this news of tapering and the reaction that we got off of the one Fed member yesterday, I think that we got headline risk right now as the Fed is preparing the market for them tapering. ATR targets right now, full session high, I don't think it's changed. Still 19.25. So full session high in the Globex, full session low in the Globex 1812.75, and that gives us an ATR target to the upside at 1827 and 1804.91. So we'd call it 1805 on the low side. Of course, we'll put in our RTH numbers and see if that gets adjusted for the full session. But right now, your ATR targets are 27 and 5. Let's take a look at the trend macro to the micro. Monthly, very much intact. Trading middle distribution above the open of the prior month. And trend is intact. Good slope and separation, price paralleling. Nothing is going to invalidate that with the move that we had yesterday. We did come down right to the 9 EMA yesterday and rejected it from above, closed this little tech gap that we had on the weekly, but we're currently holding above the 9 and the 20, and we still have slope and separation. So the trend is still very much intact on the weekly. On the daily, a little bit of a different story. We broke down, closed below the 9 and the 20. It's the first close we've had below the 20, going back, or for the year so far, but going all the way back into, early December. But we are coming up to test the 20 from below, and we're coming into a bit of an MA squeeze on the daily. So we could break back above, or we could bounce off. We just have to watch how we handle the open today. Take a look at the geometric chart. We rejected the upper line of the opposing downward sloping fork, and finally broke below the center line of the intermediate upward sloping fork, and currently trading below. A retest to the center line of the upward sloping fork is a possibility, and that takes us up into the 1830.25 range. Of course, we've got this energy point down here. Everybody keeps talking about that 1790 area. If we do get another sell-off today, this could be a possible destination down at the 1790.50 area. Other than that, I don't think there's much information. We still have this energy point right here that leads us to believe that we're the top, and this rally is not over yet. We're just seeing some weakness and a bit of a sell-off. Going over to the intraday, see where we are in the trend coming into the day. We just had this big move down, and yesterday we had basically a foo bar, Mr. Sneaky, with a tech gap on the 4-hour. close of the tech gap is going to bring us somewhere in around that 21.75. I think it's 21 and a quarter is probably what's going to close the gap on this technical gap. But the trend is we've got slope and separation to the downside. We've got to see how they handle closing this tech gap and see if they reject it from below and continue the move down. But the trend is down going into the 4 hour, going into the RTH on the 4 hour. Looking at the 30-minute, a little bit of a different story. We had the same scenario on the 30-minute. We had this tech gap with a foo bar. We didn't get a Mr. Sneaky on it, but we did come up and close the gap. But since then, we've basically been going sideways. But we are above the 9 and the 20, so we're getting a little bit of strength on the 30-minute coming into the marketplace, the RTH open, I should say. And then on the 5-minute, we're starting to actually create a bit of a trend up on the 5-minute coming into the RTH open, and we're coming up to that 21 area. So we are getting a little bit of strength coming in on the open since we got the retail sales. I didn't actually see the number, but obviously it wasn't bad, or the market liked it, even if it was bad. Going over to the big picture composite, well, again, we were in this balance around the microcomposite. Coming into the from last week, we had these two different microcomposite VPOCs that were 31.75 and 32 and a quarter, and we talked about the fact that once we accepted, once we worked out what was the most accepted price at 31, which came in the last day, we said, okay, we're created value, we've accepted value, now we're likely to break out a value and go into price discovery. I didn't know which way it was going to go, and obviously it was. Yesterday morning we were also talking about the possibility that we would, now we had to be cognizant of the fact that we could come down and get stuck in the lower wicks from the prior 3 days. Well, we opened, went up, tried to break out the other way, tried to get above the year open. They rejected the year open, took us down, and we spent a lot of time yesterday, in the lower wicks until, basically we had capitulation from the buyers, and they took us all the way down to 809.50. Didn't quite get to the other side of balance. I thought we might push through to 1807 and a quarter, but we didn't. So, how does this set up for today? Well, we're currently trading, remember our line in the sand was 17.1775, which was the CLVN. It shifted to 18. That continues to be the line in the sand. This is the main area that I'll be trading off of right now, going into today's session at 18. Above 18, I'm going to be looking to get long into this 21 area. CHVN at 20 and a quarter, and then the bigger number just above at 22.75, with the other side of balance being this 23.75, 24 area that we were looking at when we were back in these days here. Above the 24, look for a continuation up towards 27 and a quarter. Remember, we all start when we got up here. It all started, this, we talked about, going into last week that we were going to be playing ping pong between, that 26 level and that 36 level. So 25 to 27 is still a key target above. The 50% retracement of the significant breakout candle is 24. So that's, the test of the other side of balance around 22 and the lower side of balance around 27 and a quarter. If we push through, look for some resistance here at 29.75, but if we can get above 29.75, then I think 31's pretty much a given with a push through to the other side of balance at 34 and a quarter. And then above that, a move up, and I think we start seeing that move to 40.50, which is what I was looking for, and then that naked VPOC and target above at, I think 41 is the naked VPOC. We'll take a look at it on the intraday chart. The value area high for the overall micro composite, and I don't really need this now that we've broken out. I can actually delete this profile right here. The value area high is up at 37. Value area low is at 26. So if they stay above 18, I think you've got a good probability that you're going to get a rotation at least to the 24 to the 50% of the breakout candle, put a push through to that 26, 27 level to test the value area low. And then we can see if we're going to get back into value and a rotation back up to 31, or whether or not they reject value and we come back down, break below 18, and then get that larger move to below. Below 18, got to looking for, that 14 shifted down to 13 CHVN, and we've got a little bit of a high volume node, and where the buyer stepped in here at that 1809 to 1810 level, but the big number below is this 1807 and a quarter. That is just above the prior balance microcomposite range high, and if we get below that, a lot of people are calling for that 805 area, but the big number for me is the last most accepted price just before the breakout, which is this microcomposite VPOC at 1802.50, and that would be where I'd be looking for them to come down to look for buyers, on the first probe below 1807 and a quarter. Of course, we've got the centennial number just below, and if we get below 1800, the numbers are 98 and a quarter and 94 and a quarter for me, and the big number below, if we get back into the 1700s and don't just dip in to find buyers and get back above 1800. If we stay below the 1800, the eventual move I'm looking for is this move down to 1781.50, which is the overall microcomposite or most accepted value in this distribution zone, or the balance area that we broke out of on this candle right here, with the other side of balance being down there at 1776 and a quarter. I don't think we're going to get much lower than that today, so let's take a look at it on the overnight and move our numbers over. Sorry, Howard, I know I'm going slow this morning. So we've got a new overnight high at 1820 so far. Again, there's still time. We could put in a new overnight high. Our overnight low, 1275, is just below that naked VPOC at 1813, and our VPOC, I don't think is going to shift, is 1575. So currently, we're going to, there's not a lot of distribution, balance from yesterday's profile. You got this upper balance and this lower balance and a lot of repair in between. So there's not a lot of significant LVNs. The one that I would think would be the most significant is going to be this 1550, which is right where the overnight value was, VPOC. We did close at 15, so we've got a gap close down here as well. And then, of course, you got 96% probability of taking out the overnight high or overnight low. Right now, you would think that it would be the overnight high, considering that we're trading just below it right now. And, of course, we could put in a newer high before the open. We've still got lots of time. But in terms of levels that I'm going to trade, of course, I am going to be trading off of this 18 CLVN, so that is going to be my main trade area for me to get short or long. Above 18, I'm looking for a rotation up through to test that 24 area. The 2375 is the other side of balance around that 2275 CHVN. This is going to be the other area that I'm going to be looking for if I'm long, for responsive sellers to step in and rotate us back down to the 18. But if we break through, I'd be looking for a move up to that 26 to 27 level. That's going to be my immediate target. Above is going to be the 2550. And then above the, the 24 level, I'll be looking for a move up to, and where I'd expect the next resistance to be up here at 2975 area CLVN. And then above that, you've got the value area high at 3250 and the IB high. This will be a target area for me if we get above that 29, and if we can get through that, a push through, up through to the other side of balance and that 40. But really, it's going to be the range high at 3875 from the prior day and the range high from yesterday at 38. This is going to be a trade area for me. If we can get back up there. I don't have a lot of high hope that we're going to make that whole retracement today. I think the upper level to look for right now is this 29.75 and 24. If we get below 18, of course, I'm looking for a rotation down to close the gap and take out the naked close at 15 with a push through down to the overnight low and the VPOC, naked VPOC at 13 and 12.75. Of course, the other side of that is this 1807 and a quarter. I will trade off of the value area low and the range low. So even though the number is, the CLVN is 1807.25, I can take a breakout trade and get in and get funded at the 0950 level. So I'll be trading the 0950 level, and I'll be looking to see if they break out or whether or not we get responsive buyers stepping in to rotate us back into balance. And then below that, 1809.50, of course, the 1807 and a quarter is going to be the first target to test. But the big target below, again, is this 1802.50 area, and this is my extended target. And this is where I anticipate the first bounce to happen as they come down here and find buyers that are going to defend the 1800 level, but also take out the naked VPOC and the naked close that we've got there. So taking a look at the Renko. Test of the center line is going to give us a move down to that 1550 level and take out the gap at 15. Below that, the other side of the lower Keltner is going to take us down to the RTH range low from the prior day, and then if we hold above the center line, a test of the upper Keltner is going to take us up into that 21-22 area. So you can see how that all fits in line with what we're looking at on the volume profile. Quick look at gold. Yesterday we said the big resistance was going to be here at this 55.30. And what did we do? We came right up to the 55.30, rejected it, and rotated back down. Current balance right now is in this 51 level. The lower side that I think you'd want to watch is this 44.40. If we get below 44.40, look for a move down to test the value area at that 12.40, 41 level, and then below that down to 37 again, and below 37, same numbers we've been looking at, 32 and 26, and the other side of balance being down here at 18 and a quarter. Below 18 and a quarter, everything shifts down to, again, that 1203.30 level. If we hold above the 44, look for another test of this 53, and again, the big number above is still this 1257 1258 area. And then if we break out of that, look for the 64.70 and above 64.70, a move up to 74 and 82. I mean, these numbers haven't changed for a while now, so you guys got to be getting used to them. So that's everything that I have. Howard, are you prepared to do anything this morning, or do we just want to shut down?
I can give a brief overview.
Okay.
So we'll start with the daily chart. And what we're seeing so far since we made our high at 1846.5 at the very end of last year, we've had a three-wave move lower. And I had a target at 1813.25. That would have been an AB equals CD target, and we did extend that a little bit. My next target, if we continue lower, is down here at 1795.25, and that would be where this wave lower is 1.618 times the length of this wave. So if we do get extension, that's what I'm looking at. Prior to that, we see that we have this long red candle from yesterday that broke below both the 9 EMA and the 20 SMA and closed below the 20 SMA. And as we've seen, closes below the 20 SMA are relatively rare in quite some time. So far during this Globex sessions, we're coming up to test the underside of this 20 SMA, which still has good slope to it. And we're even getting close to a moving average cross here. So those are some things to look out for to see if this 20 SMA holds or whether it's just a one-time or two-time breach maybe, and we continue higher. So with just three waves here, that tends to be corrective, but we did have an impulsive move down. So what I'll be waiting to see in terms of wave structure, whether we're continuing lower or whether we're corrective, is what kind of follow through do we get from this wave, and do we come close to hitting this next target down here at 1795. And there were some targets that Doug mentioned in that general area. There's a 1798.25 microcomposite BPOC. There's 1796.25 and 1796 microcomposite BPOC and CHVNs there. So there's also a 1794.25 CLVN there. So that's what I'll be looking for if these resistance levels hold. If not, this could be a simple corrective pattern and we continue higher. Quick peek at the week. We're just one day into this week. And if nothing else changes, we've engulfed the prior 3 weeks of price, excuse me, already in just one day, but we can't call this an engulfing pattern until we finish the week. But we did come down and nearly test the weekly 9 EMA, so that could be the support level that holds us above. So that'll be a key level below. Looking at market breadth. So these are the futures as of the beginning of the year. The strongest are silver and gold respectively, followed by bonds. All of the other futures that we follow are clustered just below their open of the year, and oil has been the weakest, already down about 6.5% since the beginning of the year. Take a look at the Dow Industrials versus transports. So transports remain stronger than the industrials, still a little bit below where they opened the year. They had briefly gone above and then fallen back below. And they led the industrials pretty much all year last year. Look at the sectors. So the weakest sector thus far is retail, which had finished the year in the leadership position from last year. Strongest is healthcare, and healthcare is the only sector stronger than it's open. All the other sectors are now below where they opened the year, and all pointed down since the last couple of days. And finally, we'll look at advanced declines and up-down volume. Since both of these peaked back here on December 27th, market made a high after that, but since then, advanced declines have been drifting lower and are now pretty much right at 14. So they're pretty much right at the break-even level of 50%. So what'll be key is, as we move forward, do these continue lower? As the market retraced back up here, we did not see much of a retracement in either of these two indicators here. So market breadth, since we peaked up here, has been waning. And one last thing. With our Cfg report. So we see that over the last month, large speculators have been increasing their long position and getting long with the market. That's in blue. In yellow, we have the small specs. They've been decreasing their position. Last week, they actually went just slightly short. And in the latest report, they became just very slightly long. So basically, the short specs are neutral. The commercials down here in the maroon have been, pretty flat in terms of position, for the last couple months. So that's all I've got, Doug. Back over to you.
Thanks, Howard. That's going to complete our morning market homework session. As always, trade well, trade safe, and we'll catch you on the flip side.